Good morning, and thanks so much for tuning into the trade setup. There is a tale of contrasting CPI data in the West and some other countries versus India, and that, to my mind, is the key talking point for today's trading session. Incidentally, by the way, just before we get to the US markets, keep in mind Argentina has hiked its interest rates to 133%. Think about it for a moment. Nevertheless, the US markets came off a little bit in trade yesterday by virtue of the way the CPI data came out. It's sticky inflation, maybe that is what, and plus the fact that the US markets have had a bit of a move in the last few days, so an up move in the last few days. So a bit of a pullback happening there. The yields moved up a little bit. The 10-year yield, 4.68 or 4.69, if I'm not wrong. Yep, 4.68 as of 7:30 a.m. as well. The data that we captured, and from 4.56 to 4.68 odd is what the move happened because of that inflation data. In India, well, I would reckon that the data that has come out yesterday should be a breather for the yields, and we probably, so if the Asian market and the US markets were not swooped in red, I would have believed that the Indian markets will actually do well today, and they still could. I don't know, but there are some. I mean, the fact that the IT majors will start off lower, the fact that the Asian screen is not looking good, is running against it, and therefore maybe the GIFT Nifty indicates whatever, but I would suspect that we'll start off marginally lower. Let's wait and watch what happens post that. Actually, the GIFT Nifty suggests a start marginally in the green, if you will. Okay, so what's the trade setup therefore for the day? Like I said, to my mind, the CPI data in particular in India and core inflation coming off actually provides a breather to yields. I think it will provide a breather to yields, which were higher since the MPC review, and therefore banks come in focus. I think at some point of time, belief about investments coming back also come into focus. Guidance cuts by both Infi, and actually it's not Wipro, it's my mistake, it's HCL Tech. So guidance cuts by both Infosys and HCL Tech point to weakness in the short term for the tech stocks, to my mind. But selectively, some tech stocks might actually recover as well, as would be the case, and you don't need me to tell you that. But I think the Infi ADR was a bit of a dead giveaway about what will happen to tech stocks in the session today, particularly Infosys. Second guidance cut, and I'll talk about that in a moment. Pharma may face some short-term pressure today by virtue of what's happened in the US FDA action, but the sentiments are increasingly turning bullish for the sector. And I don't mean healthcare as a broad basket. I also mean pharmaceuticals, which is the US exporters, the generic makers, individually. The sentiment is turning bullish out there. Let's wait and watch what happens to those stocks. Today, though, a couple of them might be under pressure today. So that's to be kept in mind. I'll straight away move to the stocks to watch piece today because it's a very long list of names and we need to dwell a little bit on some of those. Firstly, I'll start with the BQ exclusive and IDBI Bank, Prem Vatsa's Fairfax, Kotak Bank, Avenue Capital are amongst the preferred bidders for IDBI Bank, as per people in the know. Bilateral meetings with potential bidders have been ongoing for a few months now. The government looks to close IDBI Bank sale process by the fiscal end. So watch out for IDBI Bank in the session today, as also over the next few days. This is increasingly known, but now that we have some shortlisted names as well and the preferred bidders, we thought we'll put it out. Let's wait and watch how this impacts the stock today. Infosys. Now, if you look at the numbers and the numbers first up, you would think that all was good or there was not too much bad. The revenue numbers actually beat estimates quite handsomely, if you will. Under the current climate, I'm using the term handsome very, very carefully. EBIT numbers looked strong. Margins looked okay. Net profit numbers largely in line with estimates on that base. The problem for Infosys is that the revenue guidance has been cut for the second time. The top end of the revenue guidance revised lower to 1 to 2.5% in constant currency terms versus 3.5% in constant currency terms earlier. Though EBIT margin numbers have been maintained. In fact, Infosys CEO Salil Parekh says sale guidance change reflects the reduced discretionary spend and the decision making is still slow. And I think that, to my mind, is the issue for Infosys in the session today. I would reckon that the stock will mirror the kind of movement that happened in the ADR as well. We will start off lower and probably stay lower. Twice a guidance cut, and just shows that how difficult it might be for the company CEOs, armed with everything that they are in terms of information, to not being able to cut guidance meaningfully in one time and having to cut it twice. So that, to my mind, is the problem. Similarly for HCL Technologies, by the way. So this is the brokerage call on Infosys. Philip Capital neutral, Nirmal Bang sell, Motilal Oswal buy. A couple of others also have a wishy-washy kind of a target on Infosys. So that's to keep in mind as far as Infi goes. Now for HCL Tech 2, which is relatively better, but a similar problem. So the revenue numbers were a bit lower than estimated, 1.4%. I think the Bloomberg estimate was 29,000 crores, simply because HCL Tech at the end of quarter 1 had maintained guidance, and therefore the ask rate for a CQGR number was very high. So I think the estimates for some of the people were that HCL Tech will still deliver. Remember, I was talking about this yesterday, that HCL Tech, if it doesn't deliver in quarter 2, and Motilal Oswal had an estimate of 2%, then the Q3 and Q4 will be strong. And I think that's how it's shaping up. Just that the revenue numbers are a lot lower than what was estimated. EBIT margin, okay, steady, in fact, much better than estimated, much better than the corresponding quarter. Net profit number at 3833, much better than all estimates and the corresponding quarter. Attrition rates came off quite meaningfully as well. And in fact, for HCL Tech, aside of the revenue disappointment, everything else looking okay, the problem again for HCL Tech is that pared the FY24 revenue growth guidance to 5 to 6% from 6 to 8% earlier. So the difference between the top end and the bottom end now meaningfully expands, right? It was 8% earlier and it was 6%, but now the bottom end is 5%. So that is the problem. But they still see the EBIT margin at 18 to 19%. They've clocked in the highest ever new bookings, though, $4 billion in quarter 4. That is massive. They won 16 large deals in quarter 2. And which is why I think Morgan Stanley, while it has cut the target price, has maintained the overweight rating. The target price has been cut from 1450 to 1400. They say that the revenue guidance cut was a negative, but largely anticipated. According to them, the investors' key focus would be on the company's ability to deliver a better second half versus the muted outlook shared by peers. They expect the revenue and EBIT growth in FY24 to be better than the larger peers. Now, viewers, keep in mind, I had asked this to CVK, and he had mentioned at the end of quarter 1 numbers that even if they don't deliver in quarter 2, they believe they'll deliver in quarter 3 and quarter 4. I'll be checking with him about how confident he is to deliver in quarter 3 and quarter 4, considering that they did not cut the revenue growth guidance in quarter 2 or quarter 1, but have cut it in quarter 2. So that's a very important conversation to tune in today, whether HCL Tech can sing a different tune relative to some of its other peers like TCS and Infosys, and that may well determine what HCL Tech does after the start today. So it may well start off a bit lower. Can it recover relative to an TCS and an Infosys? I think that's the thing to figure out. Let's wait and watch. Yesterday I brought this point out of HSBC on TCS, wherein companies are winning large deals, but why is it that growth is not happening? And I think HSBC mentioned out there. So this is the first point they mentioned for TCS. I'm using the TCS thing as an example. I think if we move to the second plate, is where they have summarized this, that it's not just large deal TCV, the flow business, the second point that they're making, the flow business is equally important, and this has slowed due to macro uncertainties, and it will improve from quarter 4 FY24. So will the same thing happen for HCL Tech and Infosys? Remains to be seen. I'll be asking this to HCL Tech today. By the way, HCL Tech has, aside of Morgan Stanley's note, some of the other brokerages have put out their notes as well. Largely neutral, not too many people skittish. Nomura is neutral with a target price of 1200. Like I said, Morgan Stanley overweighted the target price of 1400. Now to some other stocks, and let me quickly move through the list. Angel One, very strong numbers. Revenues up 40%, net profit up 42%. I would reckon this stock, which has done well, could continue to do well. So watch out for this one today. Watch out for Anand Rathi as well. Revenues up 34%, net profit up 34%, AUM up 33.8%. I thought very strong set of numbers, and therefore this too to actually do well in the session today. Zaggle could do well. It announced a deal with Visa Worldwide. The deal size is approximately $20 million in the next 5 years. So Zaggle could well be a stock that could do well today. GMR Airports Infrastructure. The September passenger traffic up 23% YOY and aircrafts movement up 14% YOY should or could do well in the session today. SJVN could do well. Green Energy, which is a subsidiary or a unit, gets an LOA for a development of a 100 megawatt solar project worth about 600 crores over the next 18 months. Certainly a shot in the arm, so could do well. What may not do well are Dr. Reddy's and Panacea. Dr. Reddy's has been issued a Form 483 with 9 observations from the US FDA for the Bachupalli manufacturing unit. Similarly, Panacea Biotech issued a Form 483 with 9 observations from the US FDA for the Baddi facility. Both of these could see a bit of a slam dunk. Panacea most certainly could see that. Glenmark Pharma, on the positive side, actually, subsidiary Ichnos has entered into an exclusive worldwide agreement for its antibody portfolio. Ichnos will receive up to $320 million, which is 2,700 crores, in upfront development, regulatory, and sales milestone payments, in addition to low double-digit royalties. I would reckon Glenmark Pharma could well be one of the key stocks of the day today on the upside. Lastly, 360-degree one WAM. Norges Bank has bought 32 lakh shares. Morgan Stanley sold, but the fact that Norges has bought in could be a shot in the arm for 361 WAM. So watch out for this one. This is the XIFL Wealth, and well could do well. So that's the long and short of the trade setup today. Like I said, we will have CVK or C. Vijay Kumar, MD and CEO of HCL Technologies at 9:30 a.m. today. So watch out for that. That will be the talking point conversation of the day. FNO show at 10:30 and Stocks in Focus at 11 a.m. Kesoram Industries joins in. And the big one, Worldview with Edward Yardeni, President of Yardeni Research at 12 p.m. You might want to tune in for that. At some point of time today, we'll also play out a conversation with Indranil Sen Gupta. Or maybe we played that yesterday, but that's an interesting conversation to hear around rates in India as well as the macro outlook. Thanks so much for tuning into the trade setup. Have a great day ahead.